Hey everyone, and welcome back to the Deep Dive. Today we are going to be tackling a topic that you specifically requested, the downturn in the Indian stock market. We've got some research right here that you sent us, and we're ready to unpack what's causing this dip, and of course what it means for investors like you.
Yeah, it's definitely been on a lot of people's minds recently. So I think the big question we're going to try to answer is why is the Indian market down? And how can we all navigate this situation in a smart way?
All right, so let's set the stage here a little bit. Both the Nifty 50 and the Sensex indexes are showing a pretty significant decline right now. And look, any dip can make investors feel a little uneasy, but I think this is a really fascinating opportunity to take a deep dive into the why.
Oh, absolutely. I totally agree. Rather than just reacting to the numbers themselves, let's actually look at the underlying factors that are really driving this whole downturn. We found 5 key reasons from all this research you sent over, and I think together they paint a pretty compelling picture of what's happening.
Okay, so hit me with number one.
All right, so it all starts with the economy. India's GDP growth is only projected to be 6.4% this year, which is actually the slowest it's been in 4 years. And this isn't just some number on a report. This slowdown is actually a signal of a potential shift in how consumers are behaving. And that's going to end up impacting sectors like manufacturing and retail.
All right, so less spending from consumers means less revenue for businesses.
Mm.
And that obviously going to impact their growth and then ultimately their stock prices. So if you are heavily invested in those sectors in your portfolio, you might be feeling this a bit more.
Yeah, exactly. And actually, this slowdown kind of leads us directly into reason number 2, corporate profits. So Nifty 50 companies, which, are kind of the giants of the Indian market, they're only showing 5% profit growth this past quarter. And to put that in perspective, investors are usually looking for, growth in the double digits.
Yeah, so when investors start to see those profits lagging behind, I imagine they start to get a little concerned. And that actually brings us to reason number 3, right? The exit of those foreign investors.
Yeah, you got it. It's not that these foreign investors think India is bad investment or anything, but right now the US market with its higher interest rates is looking pretty attractive to them. So we're seeing this huge outflow of capital, something like $25 billion since September.
Yeah, it's almost like they're looking for a safer place to put their money for now.
Right.
But I imagine that mass exodus can actually create a bit of a ripple effect. It puts even more downward pressure on those stock prices, right? So, okay, what's the next piece of this puzzle?
Okay, so reason number 4 is what investors call a market correction. Now, the Nifty 50 was trading at a price to earnings ratio of 20. What that means is that investors were paying 20 rupees for every single rupee of a company's earnings. And that is a really high ratio. It suggests that maybe the market was overvaluing some of these companies.
Okay, so it's like you're realizing you've been paying way too much for something that wasn't really worth the price. So I'm guessing when investors realize this, it triggers that correction, bringing those valuations back down to something a little more realistic.
Ex-
Okay, that makes sense. But what about the global picture? Does that play a role in all of this as well?
Oh, absolutely. Reason number 5 is the global market chaos. There are just so many different factors at play here. You've got high U.S. interest rates, making investors run to those safer returns. You've got those geopolitical tensions creating tons of uncertainty. And then even these recent layoffs in the tech sector, including those big name companies, those are sending shockwaves through the entire global economy.
Yeah, it's a good reminder that the Indian market isn't operating in some kind of bubble. It's part of this huge interconnected system. And it's definitely being influenced by events happening all over the world.
Yeah, for sure. So we've got a slowdown in the domestic economy. We've got those lagging corporate profits, those foreign investors looking for greener pastures, a market correction, and just this volatile global landscape. All 5 of these factors together are a pretty potent recipe for a market downturn.
Yeah, it is really interesting to see how all of these seemingly separate pieces
Hmm.
actually fit together to create this bigger picture. But now that we understand the why, I think it's time to shift gears a little bit and talk about what all of this means for you, the investor. So I think the first thing that probably comes to mind for a lot of people when they hear the words market downturn is fear. Like, should I be worried right now? What did this mean for all of my investments?
Yeah, it's a totally understandable reaction. But I think understanding these 5 factors that we just talked about can really help us to move beyond that fear-based reaction and into, more of a strategic mindset.
So instead of just like panic selling everything, we should be using this information to make those more informed decisions.
Exactly. Remember, markets are cyclical. They go up and then they go down and then they go back up again. If you look back at history, it's shown us time and again that markets tend to recover and eventually they'll reach new heights over the long term.
Yeah, that's a really good point. It's so easy to get caught up in that short-term volatility and completely lose sight of the bigger picture. But there are some experts out there who are saying this downturn could actually be a bit more prolonged. What would you say to those people who are feeling particularly pessimistic right now?
Well, I certainly understand their concerns. And it's important to acknowledge that, yeah, there are some valid reasons to be pessimistic right now. The global landscape is looking pretty uncertain, and some of these economic challenges that we talked about, they might take a while to resolve. But I also kind of see this downturn as a potential opportunity. It's a chance to step back and reevaluate your portfolio. Think about your risk tolerance, and maybe even try to find some of those hidden gems that are kind of undervalued right now.
So instead of viewing this as like a time to retreat from the market, maybe it's actually a time to make some strategic moves.
Yeah, exactly. Think about it this way. When your favorite store has a sale, you can buy the same quality products, but for a much lower price. The same logic applies to the stock market. A downturn like this can actually be a chance to buy those really high-quality stocks, but at a discount. Now, of course, you should always do your research before making any investment decisions, but it's definitely a perspective worth exploring.
Yeah, it's like that saying, when life gives you lemons, make lemonade. You got to use the situation to your advantage.
Yeah.
But I think it's also important to acknowledge the kind of emotional side of investing. It can be tough to stay rational when you're looking at your portfolio and you see those numbers going down.
Oh, absolutely. I still remember back in 2008 during the financial crisis, that was such a nerve-wracking time for everybody. But I think what I learned from that experience was the importance of having a really solid investment plan, a plan that's, aligned with your financial goals, your risk tolerance, and your long-term vision. That plan becomes your anchor when things get rough.
Yeah, so it's not just about understanding the numbers. It's about having that clear strategy that can kind of guide you through those uncertain times.
Exactly. And look, if you're not sure where to start, there are so many resources available. There are financial advisors, reputable financial news sources. There are even a ton of online educational platforms out there. They can all provide you with some really valuable guidance. You definitely don't have to navigate this alone.
It's about feeling empowered to make those informed decisions rather than feeling completely overwhelmed by the situation.
Yeah, and one area where investors can really leverage this situation is by really understanding those sector-specific impacts. This downturn isn't affecting every single company equally.
Oh, so you're saying while some sectors might be struggling, others could actually be more resilient.
Exactly. So, for example, let's take the technology sector. We've seen those, really high-profile layoffs in the U.S., and that is impacting Indian tech companies too, especially those that rely heavily on exports or, foreign investment. But then you look at a sector like consumer staples. They provide those essential goods and services, things like groceries and medicine and those everyday necessities. And those tend to be much more stable during a downturn because no matter what, people still need to buy those things.
That's a great point. It's not just about understanding that overall market trend. You've got to look at those nuances within different sectors. And that kind of analysis can really help investors make more targeted decisions.
Right. And another thing to think about is that potential long-term impact of this downturn. It might actually end up accelerating some of those trends that were already happening, like, for example, sustainable investments. As investors become more aware of those global challenges, they might start to seek out companies that are, prioritizing those environmental, social, and governance factors, and that could really drive growth in that sector.
So while this downturn definitely presents some challenges, it also presents some opportunities for growth and innovation.
Exactly. Those companies that can adapt, embrace those new technologies, and really cater to those evolving consumer demands, they're going to be the ones that emerge even stronger from all of this.
It's like that saying, what doesn't kill you makes you stronger, right? This downturn could push companies to become more efficient and more innovative and much more resilient in the long run. It also makes me wonder about the role of the government in all of this. They have a pretty big influence on the economy, don't they?
Oh, absolutely. The government's fiscal policies, their approach to attracting foreign investment and all of their regulatory measures, those all play a huge role in shaping the market environment.
So for our listener out there who's maybe thinking about some long-term strategies during this downturn, it might be worth considering how the government's actions could really shape the Indian market's future.
Yeah, that's a really interesting point. For example, if the government decides to implement policies that stimulate domestic growth, or maybe policies that attract more foreign investment, that could have a really positive impact on the market. But on the other hand, if there's a lot of regulatory uncertainty, or if there are some policy changes that kind of spook investors, well, that could actually end up prolonging this downturn.
Yeah, it's almost like a big game of chess, right? The government's making these moves,
Mm.
and they can either boost or hinder the market's performance. It's definitely something else for investors to think about. Okay, so as we start to wrap up this deep dive into the Indian stock market downturn, what are some of the key takeaways you want our listener to remember?
Okay, so first and foremost, I think it's really important to remember not to let fear drive your decisions. We've talked about how market downturns are just a natural part of the economic cycle. So instead of just panicking, use this time as an opportunity to really deepen your understanding of the market and refine those investment strategies.
So it's all about staying informed, staying engaged, and not letting those emotions get the best of you.
Exactly. And remember, downturns can create these really unique opportunities. This could be your chance to rebalance that portfolio, explore some new sectors that you might not have looked at before, or maybe even find some of those undervalued stocks that really align with your long-term goals.
So you've got to look beyond that immediate dip and see the potential for growth and recovery down the line.
Exactly. And finally, just remember that investing is a journey. It's not a sprint. Stay focused on that long-term vision. Ride out the volatility. And don't be afraid to reach out for some expert guidance if you need it. There are so many resources available to help you navigate these ups and downs.
Yeah, well said. I think we've covered a lot of ground today. And I really hope our listener is feeling a bit more informed and maybe even a bit more optimistic about navigating this downturn. This has been a truly fascinating deep dive. Thank you so much for sharing all of your insights with us today.
Oh, it's been my pleasure.
And to our listener out there, we hope this deep dive has been valuable. Remember, while the market might be experiencing a downturn right now, understanding the forces that are driving it and focusing on that long-term strategy can help you to weather this storm and potentially even emerge stronger on the other side. Feel free to reach out if you have any other questions or if there's anything else you'd like us to explore. Until then, keep learning, keep exploring, and happy investing.